Good afternoon, everyone. This is Trader Tim from eManyMine doing a Monday market analysis video. Today, we're going to actually do a little bit more of a trade recap video and kind of walk through today's E-mini S&P price action and a couple of those trades. But let's start with the bigger picture. You can see now, for those that were trading today, another one of those V reversals intraday that ends up being a hammer. We got that back here. It wasn't quite a hammer, but we dipped below the prior swing low. Was very bearish. We were very bearish at that point, and then turned around and closed very bullish. Today was the same thing. We sold off looking very bearish. We broke the major swing low from basically the deepest low in this pullback. And then upon doing that, we didn't spend too much time down there before rallying. You can see the retracement short that traded at 27.11s sold off, and the low today was down just about at that target. We got down to an 83 and just a handful of points away from the negative 23. Now we've bounced and we're sitting right at the 26.46, which is the next retracement short that has a target down at, we'll call it 25.50s. So a couple things going into today, noting that we had this swing low from Thursday, a 26.21 just to the left of us, and then this bigger 2600, 2603 being the exact low from the trading hours only swing low back on the 29th of October. Kind of going into the day with a similar maybe possibility as we had on Thursday, because we had the potential to break this swing low back here. And at the same time, I was seeing the volatility index here, the VIX. We opened up and we did not, we weren't even close to any of these swing highs still. And if you look at the S&P, those, swing low back here, swing low over here, that's again the 29th of October, and then around the 23rd of November. And if we come to the VIX, those corresponding highs, the 11th, the 29th, right around the 20th, 23rd. This one was the only one that we broke, the 20th here on the VIX. So the VIX was not breaking out, taking out this major swing high at the same time that the S&P was breaking down. If we look through all of the top four, breaking that major swing low, breaking that swing low. Now the NASDAQ put in a lower, already broke the swing low on the last pullback, and then the Russell also very bearish. But the NASDAQ kind of a little bit deeper of a head, if you wanted to call this a potential for an inverted head and shoulders, but no follow through on the VIX, meaning that the chance that we break lows and push lower is a lot smaller because the VIX was not breaking out as the S&P was breaking down. So kind of the same thing that I saw on Thursday coming into today. So how did I play today? Well, the first 30-minute candle was very large. We kind of started range bound and then sold off a bit, and it was like 30-point range here on the first candle. And when I see that happen, I'm usually thinking, okay, we're going to be range bound for a while. When you have a big opening candle, the first 30 minutes, if we're going to trend or move outside of that 30-minute candle, we really have to move. 30 points is usually a lot in the S&P. And here's that first 10, 20 minutes of the day that was pretty range bound. Then we sold off, and then the kind of bottom of the first 30 minutes formed at the top of the hour. And so I marked the high and low of the first 30 minutes. And being a Monday, didn't really want to mess with anything inside of that. So I just kind of drew the larger halfway back from highs to lows, trading hours only of the morning. And I just wanted to see maybe we come up and touch it cleanly and sell off. And that was definitely not the case. We chopped up and then we really moved chop sideways at the 50% retracement. Then I drew up the opposing to see if, we had failed. We broke the 61.8 of the short. Then we came down, we traded at the long. Then we bounced, traded back at the short. It was just a real chop fest, very messy. And so definitely being inside of the first 30-minute range, an area that you want to stay away from. Eventually, though, we were able to get a little bit of movement and break down below the first 30-minute range. So, using a similar approach as I talked about in last week's video about using the swing high prior, this horizontal line is the bottom of the first 30-minute range. And so, looking for a retracement to get into a short as we're breaking down, I just used the prior swing high to the low that's after, basically straddling the horizontal support line. And it was a 2609.50s. Price traded there. I didn't get filled. And we only sold off a little bit, but notice how that short lined up with the bottom, this gray line, the bottom of the first 30-minute range. So when we break through a level and then we come back up and retest it, I'm looking at that area for a reversal, a short, because we're below the first 30-minute range. So I didn't get filled on that trade. Then we broke through it again, and at that same time, so we came down and made a low at 2603.25, and that was basically the low, like our major swing low, 2603s. So I was thinking, okay, well, maybe we double bottom here and start moving higher. And so we broke above the first 30-minute range, or back into it rather. So I drew up from lows to highs and got long at 875s, and that did not do anything. Kind of had little bit of a bounce, but really was dirty down here already and traded down basically to the 61.8. So I got stopped out of the long, and that made me think, well, okay, so this swing low back here is basically the same as the low from the 29th. So this is the double bottom here. So if we take this out, then we could be going into like a bigger sell-off, and maybe I'll keep my eye out for that V reversal. So the long broke. So what do? We get rid of that drawing and we start drawing shorts. And so from that swing high down to lows, gave a big retracement short. And rather than just putting a blind limit out here and having having basically my stop would be within the 50 and the 61.8. I don't like putting on trades where my stop is inside of the 61.8. So I just let this short trade, we had broken the swing low back here, which was the 2603s as well. And so we were below that. We did not have a low tick at lows at 54. If I come over, we started getting some low ticks, and it was like 52. We got the low tick back here, and then we made a new low. So if we don't have a low tick that lines up with lows, we're likely to continue making new lows. If they do line up, then there's a good chance that that is the low of the day. So let it bounce. I had drawn up the short, was looking for a retracement here, or at least a reaction there, and then draw up the opposing long. We failed that 61.8, so that gives the all clear to draw up the very next short. We broke the swing low, and entry at 2602.50s is where I placed my short. Just the first 512 setup following the little bit larger setup. And it was important that we broke the swing. It was important that, one, we broke this swing low back here, but also that we broke the long. We traded through that 61.8. So anyone who might have drawn up the long and said, I want to be long at this 50, boom, they were stopped out and they were being shown that they were wrong. So 26.0250s was the short. And then I rode that down just by trailing these swing highs. We had, pretty decent number of swing highs here. Then we started moving a little bit quicker, and then we got this one little, one candle swing high. I actually took a little bit off down in here just because we were moving very quickly. I got a little bit aggressive with my stop, just trailing each candle's high. And then once this little swing high formed and we started selling off again, I just moved I broke my stop up to a few different places for the contracts that I had on. That way I could be aggressive with a portion of the position and a little more conservative with a portion of the position so that, if we do start nose diving, I don't want to give back 5 points, but I also don't want to get out of the trade for 10 points when it might go 20 points, and you don't know how far the trade's going to go. So by kind of doing a combination of both, a little aggressive, a little conservative for the trail stop. I mean, all you need is 3 contracts, and you can take one off at a very small first target, maybe 2 points, and then be aggressive with one of the 3, 2 that you have left, and then conservative with the other one of the 2 that you have left. So anyways, we sold off, and then ended up, my stop was up here above this swing low, and we had come down and got a low tick down at 03s, 903s here. And so I didn't close the position at 903, but instead I just, this wasn't too terribly far away where my stop was. So once we came up and broke through here at 88s, that's when I got taken out of the short. So I closed out that short position. And then we had the low tick that lined up with lows, and we were below this swing low, same exact scenario we saw last Thursday. And so I just drew up from low to high, and 85.75 was the long entry. And unfortunately, that really didn't get very much momentum. So 85.75 just by rounding up. And then we went up, and it started to get, we traded to the first target here. Let me get rid of some of these other drawings. There we go. So we traded off lows, and we moved up to the first target at 25.89s, or 88.75s, really. Then we pulled back, opportunity to move the stop up when we broke out again. And so there were a lot of opportunities to tighten your stop up through here, but then I got taken out right here at 90 evens. And so unlike last Thursday, where ended up being a nice run off lows, this one was a lot messier. You can see all that sideways movement here. And so capitalize on the short, capitalize a little bit on the long. I mean, these were still great trades or big size winners, even though they don't look very big here. When you come over and look at the the numbers, 86 up to a 90, 4 points, and then 02s down to 87s. I mean, decent trades, size of trades. So sometimes sometimes I might have big, long winners intraday, and we end up trending to the downside. Or have a mix of a winner, a loser, and then you come to the end of the day and you end up with a trending day to the upside. So it's not that critical, I've found, to be completely aligned with the daily trend. I'd rather be aligned with the most recent short-term momentum. So if we're starting to nosedive and sell off here, I want to be getting in that short, even if maybe some other factors might be pointing towards the market going higher. Before we go higher, the market had to sell off and break this swing low. And so capitalizing on that leg of the move down is just as valuable, if not more, sometimes than waiting, and then only taking a trade in the direction of, say, the larger daily time frame. So, anyways, that's kind of how that is how I traded today, and my thought process for the day. Tomorrow, if we break this 2661s up here, the 61.8 of the next daily, notice how they're getting pretty small. They're really only 2 candles, so those typically don't have as much weight, and we end up failing those a little bit easier. Now that we've broken the major swing low with this hammer, whereas last Thursday it was a prior swing low, but it wasn't the major one. We may have an opportunity for a leg up. I mean, we're awfully close to the end of the year. We basically have 2 full weeks of continuous trading before the Christmas holiday. Christmas and New Year's, things will die off. There will be basically no volume and nobody's trading. So if there's gonna be a Santa Claus rally, it would make sense that it would start here and go for the next basically 10 or 9 trading days that we have left. So tomorrow morning, doing a live trading session as always, as we do on Tuesdays. You can check that out at eminimind.com/VIP. And I wish everyone a great holiday season and a great week of trading.